All right, good day, guys. We're going to get into week 2 business processes. So, what are we going to talk about today? We're talking about process mapping. So, what's process mapping? Hang on. So, you're planning a new strategy, want to improve customer satisfaction, want to know why some of your projects are failing. Process mapping is the first step to find out how and why to these questions above. Okay, so the first thing you do if you're trying to figure out what's going on with your project, why is it failing, how do you improve customer satisfaction, a bunch of different things, you come up with process mapping. A process map visually shows the steps of a work activity and the people who are involved in carrying out each step. When mapping a process, you simply draw a box for each step and connect them with arrows to show a flow. Now we're going to see an example of process mapping. So a basic process map looks like this. Okay, so if you find a topic, you do your research, you create a post outline, write the post, proofread the content, publish the post. Very simple. Okay, that's kind of what a process map. This is what a basic process map looks like. There's very complex ones. So process map symbols. So there's always symbols in a process map. You saw there was a circle and squares and arrows and stuff like that. So each step in a process is represented by a shape in a process map. These shapes are also called flowchart shapes. There are nearly 30 standard shapes that you can use in process mapping. However, we think for most people, using a handful of the most common shapes will be easier to understand. So, which is why in this course we'll be only discussing the basics. So here are some symbols. So there's plenty, like we said, plenty of process map symbols, but we only cover these basics. So you have the activity process, right? To represent a step, right? That's a step. The diamond shape here is a decision, right? To represent what type of decision has been made. The circular cylindrical ones are a start and an end, right? So you represent a start and end. The arrow is to represent the connection between two, right? As we saw before. Document to represent data or information that can be read by people. So then just document, okay? So those are the basic shapes that are going to be used in this process map. So what are the steps in process mapping? So first you have to identify the process you need to map. So process mapping basically when you're trying to figure out all the steps in a process, right? From A to B. A to Z, right? What happens? What you're looking for? What's the process to get to the? What are you looking? What do you want to do? And then basically, or like, what's the issue? And then where do you want to be? And then how to get there. Okay. So identify the process you need to map. Decide where you want to start. Is it with the process that is underperforming? Is it with the process that is important to your new strategy? Or is it with the process that directly makes an impact on customer satisfaction? And then give it a name, right? So that's step 1. Find out what it is, give it a name. Step 2, bring together the right team, as we know. It's very important, human resources. Having the right people to do the job is extremely important. Gather all necessary information. So where does the process begin and end? What are the steps in between these 2 points? What are the inputs and outputs of the process? What does what mean, when, where, and how, right? So gather all the necessary information. Guys, this is kind of like basic, this is very basic stuff, right? This is like basic problem solving, basic getting anything done. These are steps you use in getting majority of things done. Organize the steps in a sequential order. As we know, you got to make the steps. Draw the baseline process map. So draw a process map that shows the map as it currently is. So just a basic process map. Analyze the map to find areas for improvement, and then implement improvements and monitor them. So it's literally everything that we do on a daily basis if you're trying to fix something, right? If you're trying to fix something, let's say with your family or with your kids, this is something that you would use as well, right? Because you're trying to figure out, okay, what's the issue? Where do we want to be? What are the things in the middle that are harming our productivity or harming us from getting to that position. Okay, what's a purchase requisition? So, purchase requisition, also known as a purchase request form, is a document that is used to request a purchase order. It's the first step in procurement process for a company to obtain supply services and purchases from within the purchasing department. So, purchase requisition is basically a form that you fill out if you're trying to purchase something in a company. Um, Purchasing request forms are documents developed by the purchaser. You're waiting for the thumbs up. Basically, you're waiting for the thumbs up to do a purchase. So if something, usually, as you can see down here, so you can't go crazy with company cash. You need an approval process for validation purposes. This serves as the first step in creating an efficient audit trail with transparent records. It shows the IRS or CRA that you're keeping track of business finances. The purchasing department only look at the purchase requisition form over a certain dollar amount. So every company differs, but the average cost is anything $5,000 and over. Each requisition order contains certain information. This can be vary by industry, but basically the data that they look at is name of the department requesting, the location and mailing address, exact amount of items, description of items, legal name outside the supplier, expected price of purchase, requested delivery date. So let's just say you're working in a company, and you are in the let's say you're working in the warehouse and you're the warehouse manager and you need to get a new forklift. The forklift costs $15,000. You have to put in a purchase requisition form first to the company and then have the company approve it before you can go ahead and try to purchase a forklift or even try to find some pricing for forklifts or go out for pricing. So why you need a purchase requisition? When a proposed purchase exceeds a certain amount, you want to document that for tax purposes. Every organization needs to buy things. Without a paper trail, the likelihood of fraud vastly increases. So I hope you guys are with me so far. This is interesting stuff, and it's also very simple. A business must maintain some form of control over their pocketbook. To prevent this, a procurement department serves an important role in supply chain. They are a second set of eyes on the money going out. This is an essential strategy for small businesses where every penny counts. Very important. This is why you need a purchase requisition, so you can make sure that no money is leaving your company without it being completely tracked and approved. So what's a PO? So the purchase order is the next step in the purchasing system. So once a purchase requisition is approved, then is assigned a purchase order number and sent to the vendor. So the external document initiates the sales transaction and is a binding contract for all parties involved. The purchase order system is designed for organized record keeping. The PO number that is assigned generally matches the requisition number and they are filed together. This happens with my company all the time. Because the companies that we work with they purchase so much, like for example, Salvation Army, Sobeys, Shoppers Drug Mart, Home Depots, all these big companies that are always purchasing when they're purchasing high value units, anything above a certain amount, they have to do a purchase requisition and then a purchase order, and they send us the purchase order. Basically, is a binding agreement where we have to fulfill. If they send us a PO, they send us a PO number as well, and we have to match that PO number to our invoice and make sure everything matches, and then that's kind of like a contract for us to manufacture equipment for them. So just like a purchase requisition, a PO requires certain information like the name of the purchasing office, items to be purchased, payment terms, invoicing instructions, ship to address, purchase order number. Guys, this is all standard stuff on POs. A lot of you guys work in warehouses, POs. I'm sure you guys understand what a PO is if you work in a warehouse. So why do you need a purchase order? A business should never be satisfied with verbal commitment. As we know, in business, it's extremely important to get some sort of a documentation if you're trying to purchase something. There's a great amount of legal risk involved, right? If something goes wrong, then you're going to be in deep water. If something like let's say that you purchase equipment and that equipment you send the money and there's no PO, there's none of that, no agreement or anything. The money's already sent. then there's no way to track it, and that company that you sent the money to can just keep your money and say, oh, well, we never had a PO, we don't know what you're talking about, right? So stuff like that. Purchase orders puts things on paper, which is then can be used if you have to file a lawsuit. You can always use that. Make this smaller. Certain financial audits. This is particularly important as your business scales up. It would be harder to track purchases without an assigned number like a PO. Certain financial audits also require you to turn in purchase orders. Blah, blah, blah. Purchase orders can help a company avoid surprise price increase. I mean, yeah, if you have a PO, then if you have a PO with a company to buy something for $30,000, and then the company says, oh, our cost of goods went up and it's going to be $40,000. You say, well, the PO is already there for $30,000, so that's what we're paying. This clears up any potential for miscommunication or misappropriated funds. The process will also keep your orders and invoices in check, so it makes it easy to identify which products you're buying that are coming in at any time, and aids inventory management. If you have repeat orders, it helps to sort them down the road. Okay. So this is why you need purchase order, guys. This is important because on your quizzes and final exam and stuff, I'll be asking you what's a purchase requisition, what's a purchase order, what's the difference, why do you need them, stuff like that. Okay, so what's a goods receipt? Goods receipt refers to the physical movement of goods into the warehouse from external vendors. Okay, so any goods that you bring into your warehouse from external people, that's called a goods receipt. It always increases the stock of goods in your warehouse. You can plan and manage your goods receipts and monitor the stock of ordered and produced materials. So if you're ordering stuff in, like, it's always good to have, it's always good to, not always good, but you should always have goods receipts, right? That way, when something gets delivered, you know exactly how much, when, where, and why. Purchase order goods receipt is in the material management module of SAP. Goods are usually received with, don't worry about the module of, that's all just textbook stuff, but goods are usually received with reference to a purchase order issued by the purchasing department. A purchase order is an important document for purchasing, monitoring, and inventory management, as we know. So that's purchase order, right? So if you're purchasing something, there's a goods receipt that comes from that because you have stuff coming to your warehouse. Production order goods receipts. So in the production planning, goods are usually received with reference to a production order. A production order documents the reason for producing a material. It is an important tool for planning and monitoring inventory. Other goods receipts. So if you are creating goods receipts without any purchase or production order, you can enter reserved quantities into the planned goods receipts. Okay. So what's the difference? Purchase order goods receipts, production order goods receipts, right? If you're doing a production order, which means usually if you're getting documentation for producing some sort of material. So let's say that for us, our production order in our company is we have to buy all the steel, right? We need to know what our production orders are, so we can buy all the steel. And then we can get a goods receipt for buying all the steel to work on creating these orders, right? A purchase order goods receipt, like a PO receipt, is also kind of the same, but these are in reference to stuff that's obviously done with a purchase order, right? So stuff that's bought for the plant, like I said, forklifts and stuff like that, that's not for producing your equipment. It's for just buying stuff for the plant to, like I said, forklifts or machinery or stuff like that. But a production order is for buying the necessary supplies that you need to fabricate your equipment. Invoices. An invoice is a receipt, like we all know what an invoice is. It's not a receipt. And the key difference between the two is that an invoice is issued before payment as a way of requesting compensation for goods or services, while receipts are issued after payment as proof of the transaction. So we send invoices out all the time, and those invoices we send out so that companies, our customers, have a paper trail of a paper trail, yeah, I guess a paper trail, paper tracking of how much money they owe us. So invoices are sent before payment, receipts are sent after payment. An invoice tracks the sale of business goods or services. A receipt serves as documentation for the buyer that the amount owed for the goods or services has been paid. Simple. Three-way matching. Okay. When you have the invoice, the purchase order, and receiving report. Three-way matching is basically the process of matching all those together, right? You match the invoice, the purchase order, and receiving report to validate the details of a purchase before making a payment. Okay, so you look at the invoice, look at the purchase order, you look at the receiving report, and you see, okay, do all of them match up? Okay, perfect. Now we can make a payment. The purpose of this process is to reduce the risk of fraud and financial loss by preventing the reimbursement of unauthorized purchases. Happens all the time in business, guys. I've seen it happen in companies where I worked at, and it's not fun when the quotes that are given to you don't match the invoices, and the invoices don't match the your budgets for that one client. If you're doing your budgets and saying, oh, we're gonna make this much money off this client if our logistics cost $1,500 to get there. Now when your logistics company says, yeah, we'll get it done for $1,500, but sends you a bill for $2,000, an invoice for $2,000, you have to match those things, right? And you have to see, that's how a lot of companies lose money, because they just end up paying these invoices when they don't do their background check and the three-way matching and making sure that everything is on point. So that's what happened with our business. And so when I was hired to make sure that none of this stuff happens anymore as well, on top of doing all the sales and all that stuff. I had to make sure that we're not getting screwed by anybody. Paying a vendor, very easy. How do you pay a vendor? How do you pay one of the people who are supplying you? ACH transfers, checks, and credit cards remain the most popular and best ways to pay your vendor. Regardless of how you process these payments, organizing your bills and paying your vendors is likely not your favorite pastime, especially as a small business owner when every bill counts, blah, blah, blah. And ACH transfer, also known as direct deposit, is a method of sending funds from one bank to another using automatic clearinghouse, ACH, automatic clearinghouse, basically a bank. To process an ACH transfer, a request is made from the payer's bank account. Then funds are sent via the ACH network to a recipient's bank. And that's it, guys. Very easy slides. I'll see you guys in class.